Morning, everyone. This is Bruce at Fleet Capital Management. It is Saturday morning, the 4th of November, 2023. We are going to take a look at the markets, both looking back and also looking forward, what we might be able to expect. And so let's just jump right in. As always, we need to say the video presentation is intended for educational purposes only. The discussion of any security is not a recommendation to purchase or sell the security. I'm always available, Bruce at Fleet Capital Management. Our website, fleetcapitalmanagement.com, 2 buttons. This will take you to the most recent video, and this will put you on my calendar to schedule a Zoom meeting. Last week at this time, we had just experienced about 3 or 4 weeks of negative market action, which was a little disparaging. And last week I said, hold on, based on seasonality trends and what the charts look like, we may very well be ready for a pop. And that is exactly what happened this past week. Continuing on our seasonality, and to give you a little bit more good news, Tom Bowley, one of my my favorite analysts, just came out with this morning, and this should give you a smile, hopefully. November seasonality, just looking at the month, is very bullish. The S&P performance is really strong. November ranks as number 1 among all calendar months in terms of annualized return. I want you to focus your attention to this middle part, because even when we have good news, nothing goes up forever. You can see here, and these are annualized, so don't put too much credence into them. But, on the positive side, there's a lot of strength in November. Like he said, it's number 1 among all calendar months. But November 6 to 9 annualized has been negative. November 14 to 20 has been negative. So that even in a positive month, if we have a negative week or two, you just have to understand that that is part of how the markets work. The markets can go up, they can go down, and they can go sideways. We've talked about that a number of times. But if we think about it, even in an uptrend, we would have an up market, we would have a pullback to around 50%. We would have another up market, we would have a pullback, sometimes to about 50% of the prior, and we would have an uptrend, and so on. The point is, this is clearly an uptrending market, but there are always pullbacks inside an uptrending market. So that's just important to remember, so you don't get discouraged when you have those. That's why we're always looking for trends rather than just one particular movement, okay? So let's move on from that. I thought that might bring you a little bit of encouragement. Going on to our matrix that we update on a daily basis. We've updated this through November 3rd, and we've had a couple of changes. The hull right here has gone from red to green, and the weekly GNG, or go-no-go chart, has gone back up. So on the daily indicators, which are our most aggressive, fastest indicators, the hull is now green, and as I will show you, the 821 is really close. That should turn green pretty soon. On the weekly, the hull is still red, but the go-no-go trend is back up. So these are just things that you want to pay attention to. We still are in a kind of a cautious mode, but I think that's going to change very quickly on the moving averages. And on our primary bear market avoidance, you're going to see that these two are pretty much kissing, and they're about to flip. So let's go to another chart, and let me show you what all that looks like. So here is, and I'm going to get rid of some of these drawings. Bear with me here. There we go. So here is the go-no-go charting software that I also use. And on the daily side, this is the daily S&P. A couple of important things. This last candle, this is from yesterday, just turned back neutral. It had been downtrending colors. These are all downtrending colors, but we did just turn back to neutral. And the price closed above the 50-day moving average, and which is the gold bar. That's the 50-day moving average. And this is the 20-day moving average. Now, what we want to see is the 20 come back up across the 50. That's going to happen fairly soon. But the nice thing is we are above all of those moving averages, and that's really important. On the weekly side, we have gone from what was, let me just grab something here. We've gone from what was a kind of a neutral colored arrow or neutral colored bar to now being in a brand new go trend. And what you can see is that, bear with me one sec, I'm sorry. What you can see is the 10 and the 20, which are bear market avoidance indicators, are basically kissing and just about to cross. Now, the reason this is important is if we didn't have this huge last week, this would have kept us out of the market if we were going back into either a bear market or a protracted correction. So these indicators are critical to us. They will get us out of the market, not at the very top, but before there is significant damage to be done. So that's why I always show these to you. I think they're incredibly important indicators. If we go over to my other charting software, what you will see is the 8, which is the 20, the 8, which is the white moving average, is just underneath the blue 20. So that's about to cross. Price is above all of them. The hull, which I mentioned before, let me grab you a hull. The hull is right here, and that just crossed green. Very little, but it's the beginning of the cross. This is what it looked like the last time. So it can happen to be just a very small, but it starts a little trend. And what I suspect is we are going back into a trend kind of like this for November, December, maybe even January, longer term trend. All of this seemed to be caused by the Israeli-Palestinian war, fears of inflation and interest rates, and those seem to be declining pretty rapidly. If I look down here, the green directional index has now crossed above the red. That's a very positive sign. The true strength index has crossed back up. It's a stronger signal when it's above the 0 line. We're not there yet. So lots of good things that I'm seeing. I'm not seeing anything really negative. I'm seeing lots of positives. We are not perfect on the indicators, but we are moving in that direction. So that combined with seasonality, I'm going to spend much of today and part of tomorrow doing research on individual stocks and ETFs. My intention is if we have any pullback at all on Monday, or even a flat day, we're going to start reallocating our portfolios and getting very close to 100%. And again, it all depends on the market action, but that's the direction we're moving. So lots of research coming. The one stock that many of you are holding is this stock, Parsons Communication. That blue line is where we entered. And then our stop was down here. I just moved it up a little bit, so that's nice. And that we had a really big day on earnings, and that's looking really good. Everything about that is looking good. And I think we're up a little over 5% on that stock. Actually, let me go to my Stockpedia page. Yeah, we're up over 5% already on that stock, and we pretty much just bought it. So I'll be looking for at least 5 additional stocks that I'd like to add. I'm also going to be looking at some ETFs that I'd like to add. And just so you know, I am going to be selling approximately 50% of our position in SPY, and I'm going to add that to the growth at a reasonable price ETF, which is SPGF. For the time being, during this strong seasonality market, we're going to own both. Once we go into a little weaker market, which is hopefully months away, we will probably sell the rest of the SPY, hopefully at a very nice profit, and add that to the SPGF, growth at a reasonable price. So there are a lot of moving parts going on here, and I will be working on that this weekend. So I hope this helped. And like I said, I'm not seeing anything really negative. I would love for this to cross back up, and we need this to turn back green. But based on market action and seasonality, we're going to start adding to securities as early as Monday. So that's a story. Hope you enjoy your weekend, and I'll be back with you Monday. Just feel free to shoot me an email if you have any questions. Bye-bye.